Welcome to the Real Estate Show on KMED. Saturday, December the 23rd is our date. Merry Christmas to you all. Pete Belcastro and Joe Brett, the real estate guys here at KMED. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. And man, it seems like the end of this year, there's just a whole bunch of stuff that's stacked up that all of a sudden is facing real estate investors, buyers, sellers, renters. You name it, there's something big that's brewing among all four of those areas in real estate. It's amazing.
Thanks for the holiday buzzkill. We're going to get into the tax code and tax implications. I think some of the things I'm trying to forget about.
I think it's
hot buttered rums to
I think it's
wash
exciting.
away from the last
I think
year.
this is exciting
it is.
stuff.
We've got to get a handle on it, on
it's
what's
been
coming.
30 years, 31 years when Senator Bob Packwood, I remember this, we were in the news business back in those days. 1986 is when they had the last big, tax reform hoopla in this country, and everybody, there were the doomsayers and the this and the that, and everything, everything went through. So here we are 31 years later for the next time.
Sounds pretty familiar.
And it's going to have an effect on everybody, just like the last one did, out of that thing. Guy Giles is with us here in the house today at KMED. He's our resident, mortgage expert at Bank 34 Mortgage. First of all, Merry Christmas to you, Guy. How you doing?
Merry Christmas. I'm actually a little bit more excited now you're talking about tax cuts in the mid-'80s, because that actually carried us all the way through the Clinton years in the 90s with a very strong economy.
That economy went all the way through the big bust of 2000, right before 9/11. Remember the dot-com bust? Yep. You're right, though, Guy. It was a boom time from the almost mid-'80s all the way through the 90s. Absolutely.
So go call your realtor right this second and get a house, because it's going to go up.
Well, I will say, the economy here in Jackson County, is doing really well. The unemployment is down. Wages are up a little bit. The economy generally is at a high pace. So there's a lot of things going on, and of course that affects real estate, doesn't it? It affects lending
and our home loan rates for sure,
and everything else. Home loan rates. Here. I was really surprised when I heard that rates were higher a year ago at this time than they are today. Who would have ever thought that? Not by much, but anyway.
Well, actually, it was on an example that I had today, of all things. Just yesterday, I had somebody contact me that I'd talked to a year ago and got her pre-qualified. And when I went in to look at her rate, kind of what I was quoting her last year to make sure everything was okay, and JJ, I'll get your letter for you in the morning. I'm just making sure that this thing is ready to go. Anyway, it was a full 0.25% less, and I was like, "What's the difference?" And that was it. It was right after the election. Everybody went crazy, and now it's backed off a little bit.
Yeah, the ship was going to fall off. The ship was going to fall off, and the end of the world, and it didn't happen.
Full 0.25% lower than I was last December.
Yeah.
So
and that's with 3 interest rate hikes in 2017.
Yeah.
So they have not affected the interest rate of mortgage, which I don't think they will, because again, all bets are off if that changes.
Yeah, and I think obviously there is no direct correlation between the Fed raising rates and the home loan rates. What it is an overall sign of inflation, and the Fed's job is supposed to be just to control inflation. So, if they're seeing a little bit of that down the road, that's when they start raising rates. And on our side, it's just a matter of where everybody's investing their money. So if you're kind of bearish on the market and you think it's going to, if it's going to go down a little bit, then you might go into some long-term investments like the mortgage-backed securities. And right now, people are just making a lot of money in the stock market. So that's really what's hurting our home loan rates a little bit, is everybody's making a killing in there.
See, when you make money,
Bitcoin. We should have got in on Bitcoin.
And all those kind of things. I don't know about that one. We'll see. Cheryl Malone's also with us. Cheryl's a real estate broker with Windermere Van Fleet here in the Rogue Valley. And Cheryl, you've been around a while looking at these markets and everything. What was your 2017? Tell us what your went through this last year.
Oh, it's been great. Sorry, I got a bit of a cold here, but it's been great all year, and it's still strong. Last month, I had probably the best month out of the whole year in November. So, just a good sign that, during the holidays and the winter time is still a good time to buy and sell, because the buyers out there are serious and the sellers are serious, and
there's the inventory is not as high, so you have less competition when you sell right now.
Absolutely.
So there's a lot going on there. You talk to people a lot? Do you see do people talking about this tax reform? Are they aware of kind of things, what's going on with it, or just kind of not? I guess we wait till it's done and then we guess whether we like it or not.
I don't get any big conversations about it at all. I think a lot of the people realize that right now it's better to buy than to rent, no matter what. There's always the tax benefits from home ownership. So no matter which way, it's a win-win for them.
Yeah. Well, and you've been selling, buying, just people everywhere. Tell us what you've experienced lately with it. Are they out-of-state people? What's going on with you there?
Yeah, a lot of people relocating. A lot from California, other areas as well. So get a lot more for your money here, and it is more a seller's market. So they kind of come and fall in love with the area and feel they need to buy.
Yeah, we were talking. Oh, go ahead.
The impact of those fires down there could be felt in our market in this year to come, because a lot of people, unfortunately and tragically, are having to face the consideration of rebuilding where they're at or what their options might be otherwise.
Well, I hear the cost to rebuild is astronomical.
Well, this is what's going to happen to us here. Okay,
and then the hurricane damages that we're trying to take care of in our nation.
Well, what's happening to us here, and Terry Button from Button Construction, he was here a few weeks ago, and he's a contractor. And there was a Monsanto insulation plant that was destroyed in the fires in Santa Rosa. And they've already warned people next year that there's going to be a shortage of insulation, and that the prices are going to skyrocket. And what's happening, that you add the skilled labor shortage, now you're going to add building materials shortages, and you're going to add costs to that. You're going to add delays because they're not going to be able to get all this stuff done. And the demand here, we're in for, I think, 2018. Guy, what do you? I think we're in for a real problem with new construction going on here and trying to keep costs up. And look at the shortage that we have already. This is going to make it even worse.
I do anticipate some problems there, and and some of the stuff I understood they might have signed something into law saying that every new construction now has to be equipped for solar.
Well, it's coming. It's coming to California and Washington, where new home construction of the future will be zero net energy.
I just think about my little house on the north side of the hill, and my one up on Hillcrest. It's like, what good? I mean, I'd love to put solar out there, but it's just not feasible anyway.
Yeah.
I was just thinking about like the overall cost of things, but. I do see definitely a shortage as far as that goes. So if you find that house that you kind of like, I'd just pull the trigger right now.
You better do it now. And if you get insulation, you better buy it now because it's not going to be out there. And this is kind of a really big concern to builders, as it should. Look how many. We had over 100 new construction units in the last 3-month period in Jackson County. And that's still not keeping up with the demand, just through the MLS. So imagine, you think with that, when you add everything in, it's really going to be a problem. I think maybe the biggest problem that we face in 2018. Who knows? Because interest rates are obviously staying where they are.
They're not going to be.
Okay, what are you quoting lately on things? Tell us what the rates are that you're, the range.
That question.
I know he does. The range that he tells us.
I know. It's like, what's your FICO score? And then we can talk. But we're still in the really low fours for a 30-year fixed. And that's one thing I'd caution people. I actually did a little bit of research last week when I got quoted at just a ridiculous rate that somebody found on the internet, and I looked, and literally it said no points, and it was just a crazy low rate. And I said, you know what, I think you probably should take this because you're not doing a purchase. This is a refinance, and you don't have a contract on the line. So I called them and I asked, and she said, oh yeah, that letter we sent out, that was a bargain that we had for just a day or so, and by the time the mailers got out, that thing was gone. And, so we don't really have that to offer anymore. And I was just like,
false advertising to me.
Worse
That's not
than bait
fair.
and switch. And then another one that looked okay. And again, every now and then I try to check it. I like people using local lenders just because, I don't want a can of soup thrown at me at Walmart or at Costco. No. I want to make people happy. And you don't have to look somebody in the eye if you buy something online. Another one was literally no points, and they're touting this low rate. And there was no points, but then there was another fee, just one of their fees that was over $4,000 that they just had in the back, and it was hidden. So just make sure when you're comparing, you're doing apples to apples if you're going online. So
well, I've gotten solicitations on refinancing and these terrific rates, terrific stuff, and I always I mean, it's like sounds too good to be true, and it generally is too good to be true. I wouldn't do that. And you're right. I'm never going to use some online
and
broker, some online lender somewhere.
Yeah, the appraisal piece is the worst part with those guys because they just don't have a relationship. I mean, I don't know. There's probably somebody else in town doing what I do, but I don't know who it is. Literally, we have our own AMC. I don't have to go out. I don't have to pay a middleman for these appraisers. They get their full fee because, again, we're not paying the middleman on these. And it's nice. I get my appraisals back quick. We don't let the appraisers onto the panel that aren't the best appraisers in town, and that was all handpicked by just random real estate agents out there. You know, who's the best to work with, and that's how we got our panel. So we're getting them back a lot quicker than those guys. We're not getting beat up on conditions as far as, you know, just little things that somebody might see on an appraisal going back and forth.
Speaking of appraisals, Cheryl, are they coming in on schedule? I mean, on target, or are we still seeing appraisals lacking or slowly? Or tell us where your experience there with appraisers are.
Actually, most of mine all year have come in on target, or actually for a little bit more. So the people that are buying are actually getting a pretty good deal in this market with the appreciation that's going on.
What do you think that has changed? Because, you know, again, a year ago, you know, we were going through appraisers. It was taking them 8 weeks to even get there. Appraisals were coming in really low. A lot of people were complaining. That's changed then.
Yeah. Well, I think supply and demand, you know, there's nothing out there. So you got to... you know,
it's easier maybe to get the comparisons.
Right.
But still, the prices are rising, though. I mean, you know, we had a 7.8% overall rise in Jackson County and a 13% rise in Josephine County in value in 2017. So maybe maybe appraisers are getting up there. And you're right. Some people I agree with. I had several myself, Cheryl, where the appraisals were low. I mean, we're underneath. I'm sorry, appraisals were higher than the selling price.
Right.
So
right.
people made some good. They made a good investment there. Yeah.
Yeah, that's always a fun phone call to make.
Yeah, it is.
I usually get those appraisals first thing in the morning, and then it's usually about like 8:15 when I call the borrower. And if it's 5,000 over, I just kind of do the math, and it's like, you just made $1,000 a minute this morning.
Yeah,
you know, congratulations. It's a fun call.
Well, that's been happening. It's good to hear that appraisers, because it's getting back into balance.
Yeah,
and it's caught up. Then that's because they don't go back beyond 6 months. So we're obviously there's enough activity going on to where they're able to give that appraisal pretty good shot there. That's good.
Yeah, and we're starting to see a little bit of relief with the with the AVMs. You know, there's going to start to be a little bit more. I think there's a little bit more of a push with good down payments towards not having to have an appraisal at all.
If I come to you,
that should help a little bit.
Okay, if I come to you today and I want a loan on a conventional loan, what are my requirements for down payments? People have asked me that. What do I need a down payment?
Well, I mean, literally, we have everything from 0%. You know, like on the USDA, which is difficult. I have the 100% financing. I mean, if you can somehow come up with, 3 to 5% minimum. I mean, I'm probably throwing out too many numbers. Ideally, 20% is the best for a buyer.
An investor has to have 20% down to buy an investment property.
Yeah,
okay.
yeah. I mean, you can actually. There is a company that'll do it with mortgage insurance with 15% down, but it's rare and it doesn't. It's ugly enough, paying the higher rate for an investment property.
Well, like when I bought my house, I had to put 20% down.
But
today you don't.
No, you don't. You can still get a really good rate. The rates are not really subsidized by the mortgage insurance companies, but they feel that the MI company has. And by the way, mortgage insurance is something you pay if you have less than 20% down, and it just covers the difference in the loan to the 20%. So the mortgage insurance company pays for that, or would pay it back as insurance. But they have their own set of underwriting, so it looks like for Fannie Mae and Freddie Mac, they actually give a pretty decent rate on that because they know that another set of eyes just took a look at that thing, and it's been underwritten basically twice as far as hitting the guidelines. So you can actually get a really decent rate. There's still, I'm doing a few of those Home Ready and Home Possible programs with 3% down. I'm doing a Chenoa fund today that just happens to fit for this lady where it's 100% FHA. And
really? Wow.
I think there might be one other company in town doing this Chenoa fund, but you can do it with whatever your income limit is, 100% financing FHA. And those limits are actually going up quite a bit. They're going up over $300,000 from the low 280s. At the beginning of the year.
These are the FHA limits that you can loan on, right?
Yes, yeah. So in our county, we're going up to $302,450 the beginning of the year. Mm-hmm. So that's going to be a little bit of relief.
And what does that give someone? Tell them what does that mean? I mean, I've got this relief coming. FHA, I can loan up to this amount of money.
Well, really, what it boils down to is just the median house price. So they want you to be able to still use an FHA. Be able to use that loan, and they were just a little bit behind because they haven't really raised the limits to keep up
right.
with how high the houses are going. So,
Yeah.
Really you're looking at almost a $320,000 purchase price for FHA, which is kind of nice.
That's pretty good. I mean, think of what you can. That's a pretty darn good investment.
Yeah.
Either county, right?
Yeah, you were limited under 300,000. It was about 290. I haven't done the math in a little while, but around 290 is about as high as you could go.
Yeah.
I mean, obviously the sky's the limit if you have a big enough down payment, but then you're really not talking FHA anyway.
Yeah.
So, I think that's going to open the doors for some people. I see some pretty nice houses around there for right around $300,000.
Are you getting more FHA loans out there? I know for a while you weren't doing many of them. It seemed like they had fallen off the cliff for a while.
FHA I've always done, one or two here or there, but a lot of the conforming, the Freddie Mac, Fannie Mae programs, they've come around to where they're filling the void that FHA used to fill. So there's still, if you don't have a good credit score, there's still a really good
way to go. They're a
yeah.
great way to go, actually. And now you're saying 3%. That's an affordable kind of thing. Hey, we're with Guy Giles and Cheryl Malone on the Real Estate Show today here on KMED, the 23rd of December. Merry Christmas to you all. We're going to take a break. We're coming right back. Going to talk a little bit about the new tax bill and what that means for real estate. It means a lot. Let's come back to that after this. We're coming right back. The Real Estate Show continues here on KMED. December 23rd is our date. Pete and Joe, the real estate guys, with you. Don't forget, you can check out any of our past shows at realestateshowOregon.com, our website. The shows are there. There's some terrific shows, everything from 1031 exchanges. Esther Auerbach was here. She's a smart lady when it comes to 1031 exchanges. Anyway, environmental sciences, environmental stuff. I had a call today about that. In fact, this week, Joe, environmental, we're talking, Jack Aiken was here from EMC Engineer Scientist a few weeks ago and had a call from looking for that type of work, environmental assessment of a property. Anyways, there's lots of activity going on out there throughout the area. An interesting thing also happening is the cannabis world right now, with California coming set to go and all the things going on out there. And the most amazing thing is that Plexus issue in Ashland, where they want to have the indoor grow downtown in a commercial zone. I would just say one thing about that. I've lived in Ashland for 28 years, and we have been lectured to, bullied at times about wise use of resources. We also have low flow. You laugh at me all the time. We got low flow shower heads, low flow toilets. We save water, we save electricity, and then here comes the cannabis grow. We're going to now go an indoor grow. We're going to use huge amounts of electricity, ridiculously large amounts of water. I think that is just awful. Go grow it outside. That's what we passed the law for, not to have these indoor grows like this in the commercial zone. I just find that to be so stupid. Am I crazy on that?
How do you really feel about Plexus issue?
the whole cannabis thing, and I'm not opposed to any of that, but the way it's evolving just doesn't make a whole lot of sense to a lot of people who voted for this and are now not very happy with it. Anyway.
When Josephine County and the Williams area are leading the rally to limit growth and to rein this in, that tells you something right there, because that's the epicenter of the medical marijuana and the growing industry locally.
Well, we all did. I'm sorry. Go ahead. I'm sorry.
I was still wondering how come he knows you have a low-flow shower at your house.
Well, everybody does. You have to. I mean, it's not like you get choices here. Yeah. You have incentives to do those things. They want you to save water, want you to save electricity, which we do. Our town is fabulous for that. And yet here comes a cannabis indoor grow that's going to use all this electricity and water, and it just makes no sense when there's so much of it outside the city. You don't need to have it in town.
The city does have its own electric utility and water distribution.
Sure, they see big money coming in with that kind of a thing. Well, we didn't get to vote on the tax reform bill that Congress passed, though, but it's going to have an effect on every one of us in this room.
Oh, absolutely.
From Guy especially, Cheryl as brokers. It's going to affect the buyers and sellers and the investors that we deal with as a result of this, isn't it?
Well, yeah, I think the big one is just completely seemed to have flown under the radar with this tax bill is it looks like it's going to be you have to live in your house 5 of the last 8 years in order to avoid capital gains if you sell your house.
Now currently that's not the way it is, Cheryl, right?
Right. It's 2 out of the last 5 years.
So right now as an investor, if I bought a place, right, I could go flip it, I could live there 2 years and then sell it, right, and not pay the capital gains.
If you could live there 2 years before the end of the year, yes.
Okay. Now when the new law takes effect, then that changes it to now I have to live for 5 out of 8 years in my house, in order to not claim a capital gains tax. That's going to have an effect, isn't it? That's going to have an effect.
If you're going to go sell your house, absolutely. That's the biggest thing. I mean, listings, which is what we need the most. And again, I don't know why nobody's talking about this, and I just happened to catch it a couple of days ago, and it looks like it's in the House and the Senate bill. So it will, it's not one of those things they're negotiating right now.
Oh, no, it's done
So
now.
what's the end game for our government to implement that in our tax code now and to lock you into home for 5 years?
I would assume it just has to do with revenue. They had to sell something to somebody else to make these numbers work so the deficit didn't get too big.
It's not going to create any more turnover because people are going to be the first-time home buyer who's going to get into that 1,000-square-foot house who really wants 1,500 or 1,800, who's going to live there for 2 years, sell it, and then move on to something bigger. They're now going to have to live there for 5 years in order to
not pay the tax, or you can sell it earlier and, of course, pay your capital gains tax. Of course, it depends how much you bought it for and how much you sell it for and how much you put into it. It's going to depend on how much tax you're going to have to pay for it.
I don't see how that helps the nice people, and I don't really see how it helps the government, but somehow it does.
No, well, definitely keep your receipts if you're doing anything to your house.
That's only doing it if you do it yourself, right? I mean, you can still buy properties out there, right? But you don't even live in. Right, but you're going to pay the tax no matter what, capital gains tax. On that.
Yeah. So anyway, it was just a nice thing for a long time that again no one's really talking about.
Yeah.
So that I think that one's going to affect people quite a bit.
Okay. Yeah. There's landlords. If you're an investor, we know that we've been under. we talk a lot about rental properties and landlords, and there's good landlords and not so good, and all those kinds of things around. But they're going to get a break out of this thing because what's happening in this tax law. For all of us, actually, even as real estate brokers, is I don't know, Guy, yourself, the first 20% of your business income is going to be passed through. So that first, say if you have $100,000 income, the first $20,000 is going to be untaxed. So then you're going to tax on $80,000. So that's a change.
Awesome.
Maybe it offsets some of the things that you're talking about, but but really the 2 year to 5 year deal for to live in a house like that is probably the biggest that I've seen so far. I agree with you, Guy.
I mean, and we could focus on the bad stuff or the good stuff, and in reality, this is probably the strongest economy that a lot of people. Well, I don't know what the demographic is that listen to the radio show, but there's a lot of people that have never even been alive to see an economy that's happening like it is right now.
Yeah.
It's rare.
Yeah. Here's another thing. This came from Trulia today. I got from a fellow named Greg Markiston. And he says here with this tax cut, more profits mean landlords are less likely to sell. All right. It says here the reason that now, instead of paying the regular income tax rate of 37%, a landlord can simply now create a limited liability company for their rental and pay the pass-through rate of 20%. See, that's what's going to change. I mean, that's what smart investors are probably going to do. That would certainly make more sense to me. Anyway, it's just going to, I guess, going to have an effect
it sounds
on
like
us.
It'll just kind of even out with some of the stuff that'll hurt a little bit, and some of the stuff that'll help. Because I think if you have a ton of them, then you're obviously your mortgage interest is going to be over $10,000, or your taxes. So you can't write off some of that. So some of it'll be good, some of it'll be bad.
All right, think about that one now. You can only write off $10,000 of your property taxes. Say if you own two homes, you're already over $10,000. You're only going to be able to do that. What about your state income tax that you could write off? That it's going to $10,000. That's going to be the cap. So that's going to have an effect on. But on the other hand, your deduction goes from $12,000 to $24,000. So it seems like there's always little offsets around. That are here and there that we'll be hearing more about in the future, especially as it takes effect.
Do you want my take on it and the depth of my research?
Okay.
Political cartoons I see in the newspaper show the middle class not doing well.
Well. I think there's a narrative out there. Yeah,
and it's like who pays most of the tax? Who pays most of the? You go all those arguments over all of this, and anyway. But we'll see. I mean, the biggest thing is home ownership is still so important, and those certain tax advantages were not taken away. And next week, when Rick Harris and Cheryl Malone will be here on the show, I'm sure they're going to tout what the NAR did to keep those things from being changed. Because I think at one time they were going to take the mortgage interest deduction was on the table.
Yep.
Things like that. And
I've seen some really well-written letters from Colin lately. So
Yeah.
anyway, nice job, buddy.
well, we'll see as it goes. I'm just curious as to whether it's going to affect the market overall. And there are many, many people who say it is, that investors are going to be less likely to sell because of what's happened now. Flipping's going to be different. We've heard you got to live longer if you want the deductions. So I'm just curious. People say that it's going to affect the market, and they expect it to go down. I don't think that's going to happen because the demand is too high. I don't know what you guys think.
I still think there's this area is so attractive to a lot of people that we're in a nice little spot that people, for whatever issue they're having, wanting to retire or get away from something, seem to find this place and find a lot of benefits to buying here.
Place to
So
weather
I
the
think
storm, so to
I,
speak.
I think we're always going to have a.
Well, the demand is not going to go away here. I agree with you, Cheryl. I mean, people found us, and with all the destruction in California, it affects our market here. So I think it's going to continue, as Lennox Scott has told us, it's going to continue through 2019. I don't know if that's true or not, but those are good signs, actually, because a robust economy means there's jobs, there's money being created, and people are doing well. And that's the best thing of all. We got a break coming up here. We're with Guy Giles and Cheryl Malone on the Real Estate Show today. Pete and Joe are coming right back to KMED right after this. The Real Estate Show rolls on KMED. December the 23rd is our date. Pete and Joe here with you on KMED. And on behalf of both of us, we want to wish you Merry Christmas coming up on Monday. Hope you and your family take some time and enjoy it. One of the things we do all the time, we work too darn hard is what we're doing all over America. Don't sit down enough and enjoy each other as much as we should. Right, Guy? Guy Giles, isn't that true?
Yes.
We go too fast. We're always going somewhere, getting somewhere. Pete and Joe here, and Cheryl Malone from Windermere Van Fleet Real Estate, and Guy Giles from Bank 34 Mortgage are here. Cheryl was talking about fires, the California fires, and how devastating they've been, and the effects that the ripple effects has on us here. And you had a good point, Cheryl, about people should look at their fire, because you had some clients who moved here from California, and they've had experiences with their fire policies about being updated to replacement. And we got fires here too. So tell us about that. I'm curious as to what that is.
Well, they were telling me that a lot of people down there did not have what they call, I guess it's building code upgrades, some sort of option on their policy that would include the upgrades according to the building department to today's standards. So. They weren't getting it. They were not going to get enough money to rebuild their house based on the current codes.
So if I had a house built, say in 1980 there under a certain code, and then I want to replace it today in 2017 or 2018, it's going to. My policy does not cover that all the new stuff, right? That's going to go into the house.
Right, exactly.
So people are not getting as much money as they had thought they were going to get.
Right, and I called my insurance company just to make sure that I had that extra coverage. And on one of my policies, I only had 10% of my coverage that would go towards building code upgrades, and I asked them to up it to the max, which was 50%, I believe, of what my actual coverage was. And it was something like, I don't know, $25 more a year or something like that for an extra, $200,000 worth of coverage.
It's funny. Fire policies, those are something that generally we don't we don't look at. Once we got it done, we just kind of forget about it and just pay it.
Right.
But it's maybe a good idea to think about that and go talk to your agent about replacement, because if a fire does come, you especially have an older house, you think it's worth this much, and you're not going to get that much, right?
Think of the new regulations for new housing, and some of the luxury items that I see them as is the net zeros and some of the guidelines that are being forced upon the industry. I mean, it just adds up. It nickels and dimes you, but then after you've had that house for 20, 25 years, exactly what you're talking about, the cost to rebuild that's going to be radically different than what it cost to build it when you originally did.
Right.
You're going to have a
have to pay for these.
You're going to have a smaller house, that kind of thing is what you're probably going to end up with.
Yeah.
Well, we'll see. And of course, and as Cheryl says, those are people who are taking their checks and they're coming to our part of the world, and we're seeing that. I mean, go to Josephine County. The as you say, inventory is really tight up there. There's a lot of people moving into Josephine County, retirees especially, coming out of there. And so we're going to see that continue all winter long. We'll see. All right, we're back to Guy Giles over here. Rates here coming in January. I mean, next year.
All this tax talk
What's
for the holiday cheer.
Yeah.
I probably anticipate about a quarter to maybe even a half. The rates will go up this next year. They're on their way up for sure.
But you're saying you think they're going to be less than 5% generally?
Yes.
In general.
Yeah, I do.
Boy, I hope you're right.
Unless you go to another bank for your loan. If you come to me, they should be.
I hope you're right. I mean, I hope you're right. I don't think it's going to go.
With the market on the rise and interest rates on the rise, your buying power is compromised. Each quarter point that goes up,
affordability
it's really
index,
time to think about that.
Yeah.
What does that equate to in monthly payment? Just for reference.
I knew someone was going to ask me something. I haven't done the math really since the rates went up the last half a point, but literally a quarter. The last time I did it, because most of the time, especially with a lot of the people around here, I'm generally about an eighth to a 1/4% better. So I'd done the math as a selling tool a while back, and when I was doing that, eighth to a quarter in rate was about 5 to 7% in purchase power. So so I mean, whatever that equates to, I'll have some math ready next time. Thanks, Cheryl.
Guy loves our questions.
Yeah.
He keeps coming back for more of those.
I know.
Well, certainly the one thing we can say is that if a year from now it's going to cost more.
Yes.
Right. I mean, there's no question it's going to cost you more.
And it's reflected everywhere. I mean, even the conforming loan limits, the ones that Fannie Mae and Freddie Mac, we talked about the FHA a little bit earlier, but the conforming loan limits now are up to $453,100 here in Jackson County. So
tell people what conforming limits.
So again, that's what Fannie Mae and Freddie Mac are allowed to buy loans up to that area, and it goes way up from there in some high cost areas like San Francisco and places like that. But for our Jackson County, it's that's almost $500,000, or right around $500,000 if you have a down payment. It's more than that. Yeah. So everybody's looking at this appreciation also. So I mean, that's my biggest fear, to be honest, is this, at least for first-time home buyers, is this affordability index. That's what's really getting skewed. I mean, they're anticipating the new first-time home buyer is going to be about 45% of their debt of their income just on housing.
Think about that.
Yeah, but
that's tough.
I was just going to say, when you're talking about a year from now, it would be more. It will not only be more because the interest rates are higher, but it'll be more because of the appreciation. The house you're
buying,
$300,000 house you buy today could be $320,000 at the end of the year, and the interest rates could be 0.5% more, and your payment could be $300 or a couple $300 more per month just by waiting 1 year for the exact same house.
Because we know values are rising, and so is that demand. So you're right, Cheryl. It will cost more. It costs more this year than it did last year.
Right, and that's $300 will go a long way on a lot of other things.
Yeah, absolutely. But you all saying is that we're going to run out of time here. But the demand, you still see the demand. I see it as strong. You guys see the same thing.
Oh, absolutely.
That has not changed.
No,
inventory. Okay, my inventories. They were, they came up a little bit. It seemed like in November. I remember we had a little push up, but of course now it's Christmas time, and December is the lowest month of the real estate year. But as soon as January hits, this is what buyers and sellers, especially sellers, need to realize. I think is when January hits, everything changes again. It starts to climb back up on that peak on the way to peak to summer. So even though we're here at the end of the year. Don't you better get it on. Think about that.
I've been just thoroughly watching Grants Pass really closely, and if anybody's got a 300,000 up there coming on the market, give me a call. I got a hot buyer ready to go, and they've been hard to find. You get right around 320. There's pretty good inventory.
And this is Josephine County?
Yeah, Grants Pass.
That's amazing.
Yeah, Grants Pass. Yeah,
remember, value
up there.
The hottest market right now is Josephine County.
Yeah, and 13% are really tough to find.
Yeah, man. That's where we used to always send everybody that just couldn't quite afford it here. Right. And it looks like they've doubled what ours went up around here this last year.
So what's the third? You're going to go to Klamath County next because it's cheaper there. And so people, as they start here, they go to... People start looking here, Cheryl. They look in Jackson County. They can't find anything. It's too high. They go to Josephine County. Well, now it's hard to find, and the prices are going. They go to Klamath County. It's cheaper. People have, everybody's individual and everybody's different. We're out of time today here on the Real Estate Show. Cheryl Malone, nice to visit with you. Google Cheryl and find her at Windermere Van Fleet. Guy Giles at guy.g at bank34.com. He'll give you all the insights on mortgage interest rates. That'll do it for the Real Estate Show. Merry Christmas to you all.
Merry
Have
Christmas.
a great holiday. We'll talk to you next week back here on KMED. God bless you all.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.